All right, so this is part 2 of candlestick entries and patterns. So let's just get straight to it. All right, so this is an example of a regular head and shoulders. So this was a key area right here. It had a really sharp move up and a really sharp move down, and it returned back to that area. Just like this illustration where we'll be looking for sales in this area. So what do we get? We get a exhaustion candle, okay? So that first candle moved up really fast. It was bigger than, let me delete this. It was bigger than all of the other candles that was surrounded. And then what was the next candle? It basically wiped out that entire green candle. So we would have hopped in as soon as it broke below this green candle. Okay, stop loss is up there. Stop loss is 1 pip above, and we're looking for a 1-to-1. Okay, boom, we got our 1-to-1. That would have been an easy sell. Okay, now that was an exhaustion bar, and then it turned into a wipeout bar because this red candle was almost close of the same size as that green candle. Okay, now we have another example right here. We're at a key level, and we have momentum coming to the key level. Okay, so the market pushes up just a little bit, and when it comes back, it never wanted to pass this low. What is this? This is a lower high. Okay, and just like this little illustration right here, once it breaks above that little this doji right here, we'll be getting in, and we'll be looking for a 1-to-1. Okay, we'll be looking for a 1-to-1. So right here is cool, and if you have patience, you can aim for highs. Okay, but like I said, I'm gonna make a video all about risk to reward, when to hold and when to not hold. Okay, but the minimum is definitely 1-to-1. But you see how it didn't pass the previous wick, and it started breaking above. We're getting in for the buy. So let's just keep going through these examples. All right, so this is a inverted. This is like a slight inverted head and shoulder. So we have the head, we have the left shoulder, and it broke up. It pulls back down to the area, and this also created a demand area as well. So it's an inverted head and shoulders mixed with a demand area and a support. Okay, all in one. So as it wicks down, we're getting in. We're getting in right here, and we're going for a 1-to-1. Okay, we always go for a 1-to-1. No matter how big your entry candle is, it doesn't matter. Okay, it doesn't matter. If your entry candle is 63 pips, your first take profit should be 63 pips. You know what I'm saying? Like, it all depends on how big the candle is. So make sure you practice good risk management. Don't try to load up the lots if your stop loss is 63 pips. Don't do that. That's not smart. Now, if it's a smaller amount of pips that you're risking, then yeah, you might can load up the lots. But this situation, this is a lot of pips. A lot of people can't stomach 63 pip losses, so be very wary of that. But yeah, definitely, if your stop loss is that big, your first take profit should be that big. So yeah, this was a good setup. This is just a regular setup. You know, this is just a regular setup. Inverted head and shoulders mixed with demand, and we have support. Clean setup. And you could have held that all the way until, I'm going to show y'all about the 13 EMA. I'm going to tell y'all about how you can hold these longer. But let's get to the next examples. We have a lot to go through. All right, so the market is slamming to support. Now, this is not support just yet, okay? Because when this come back down and this go back up, I'm not getting into this because where's the confluence? So once it comes back again, and we have an exhaustion bar, because look how big this red candle is. This let me take this little box off. Okay, so we have another candle that touches the key level, which is the low, we're getting in right here. We're getting in right there. As soon as they break above that green candle, stop loss is like, you know, 1 tick below or 1 pip below, and we can easily get a 1 to 2. This is the easy 1 to 2, or you want to just go safely for a 1 to 1 and get your profits and go, you can. But this was an easy trade. But like I said, exhaustion bars, some people probably would think that it's going to keep going, but no, we are expecting it to shake out a lot of traders to go the other way, and that's exactly what it did. And then we had another demand area right here, and then we could have. It's crazy, man. Oh, another demand area, aggressive buying, came back down. You could have took it for another trade if you wanted to. Okay, but let's keep going. This is just a regular setup. Demand came back to demand. We have our rejection candle that we love. Okay, that's good. And then we will be getting in for the buy right here. Getting in for the buy. Now you see how less you're risking on this setup. Look at the entry candle. The entry candle is so small, so you can get a great risk reward. You can aim it all the way up here, get a 1 to 6 risk reward just because your entry candle is so small. The smaller the entry candle, the better the risk reward. Okay, remember that. We have an inverted head and shoulders. This was a swing low. It broke structure and sharply moved up, like very sharp. You see how fast that moved up? Came back down to the support, and we'll be getting in. We'll be getting in right here as it break above this candle. Like I said, minimum we'll go for 1 to 1, and if you got confluences with holding it, then you can. That was an easy trade. Inverted head and shoulders. Beautiful. Now this is what I mean about the New York Stock Exchange faking people out. So 930, it pushes down really hard. 935 pushes up really hard. What do? We're getting in for the buy, because that's the false move. That's the false move that they love doing. It's always a fake out. They always show their hand and then go the other way, and they go the other way really fast. So as they break above that green candle, we're getting in for the buy, and your stop loss is literally 70 pips, literally, and your first take profit is 70 pips. Okay, and then I will honestly get out, because that's a lot of pips. That's a lot of pips. You're doing very good if you're doing 70 pips in a day. So yeah, beautiful trade. That's a fake move. The market loves doing that at the beginning of 930. Fake move. Slam down really hard and then slam up really fast. Okay, let's go. I don't know, I have some more setups. All right, we have a demand area right here. Demand, aggressive buying. We had this little baby pullback, but that wasn't a real pullback. So it came back down to the area. What do we have? We have an exhaustion candle. We have a really red candle. And then we have a wipeout bar. This is a wipeout bar. It came back down and then shot right back up. We're getting in for the buy right here. We're getting in for the buy right here. Stop loss is underneath there, and we aim for a 1 to 1. And like I said, I'm going to explain higher risk rewards for sure. All right, so what we have, demand right here, comes right back to demand. We enter as soon as it break above. So we got this red candle come in there, and then we have our stop loss right here. And that was an easy one. That was an easy 1 to 1 win, or you could have held a little bit longer for the 1 to 2, but very easy trade. Very, very easy trade. Now we have a support and resistance trade. We're breaking structure to the upside, so we're looking for swing highs, remember. So we come back down. We didn't really get an entry candle yet. Like really look at this. It breaks up. We didn't get an entry candle yet until right here. So once this was the available bar, I'm still going to use the lowest wick, which is this candle. I'm going to use the lowest wick. So this is the entry candle, and we get our easy 1 to 1. Boom, easy 1 to 1. Stop loss is underneath the lowest candle, and that was an easy dub. Okay. I know I have some more setups. All right. So this is a key area. It didn't want to close below. Then we have a wipeout bar. We have a big red candle, then a big green candle. Once it starts breaking that green candle, we're getting in for the buy. Okay, it's all just going to keep repeating itself. Now we have a lower high setup. This is still a key support level. So we have rejection candles right here. We could be easily entering for a buy right here. But say if you miss this area and it pulls back, but it don't close below here, we can be getting in over here. So anywhere over here, you can be getting in for the buy. Now, honestly, if you want to be safe, have your stop loss above that first entry. But if you want to be risky, you can have it under here. It's really up to you. It's just really risky, okay? If you want to be safe about it, have your stop loss under here, okay? All right, we have another one. Okay, so the market pushed up really fast and rejected it. As it rejected, I'm going to draw my box over there. It comes back up there with a exhaustion bar, but then we get a wipeout bar that basically cancels that out. I'm getting in for the sell right there. I'm getting in for the sell. Stop losses up there. I'm trying to aim for my 1-to-1. Okay. All right. So we have a key swing high area. This is a key resistance area. The market slams up there. This is an exhaustion bar. It slams up there. People think it's going to keep going. No, we get a doji. Now it's rejecting. Now we could have entered for that sale, but say if you missed it, you do a minor little pullback and it doesn't close this past here, we get in for the sale as it breaks below this green candle. Okay, easy stuff. And then go another illustration for the lower high sell and the higher low buy. Okay, go another supply. We got aggressive selling. Okay, it comes back to that supply area. What do we get? We get a lower high setup. It came back down, did a minor pullback, but did it close above these two candles? No, it didn't. So we're selling once it breaks below this green candle, and we have a tight stop loss, so we can get a good risk reward. The smaller the entry candle, the better the risk reward will be. So look how small that 1-to-1 is. But if you can hold it all the way down here, you can get a 1-to-3 risk reward. You know, so that's good. That's really good. Remember, the smaller the entry candle is, the better the risk reward. So we have a regular head and shoulders. It shoots up really fast, rejects, shoots down, and then comes back in that area. Okay, once it came back in that area and it started rejecting, which we love these type of candles, we're entering for the sale as it break below the low of that candle. Stop losses up here, and we're going to get our easy 1-to-1. Easy. So you see how, I don't know if I have any more. Yeah, I don't have any more. But you see how at the end of the day, all we care about is where the key levels is at. The candlesticks that we're entering in on, it does matter, but it don't matter. You have to get the levels right first. So I hope this really helped you to see the different types of setups. Rewatch this video over and over, because this is going to be the main video that you got to really get good at. Everything ties in together: supply and demand, support and resistance, inverted head and shoulders, lower high setups, higher low setups. They all go hand in hand, but they have to be at a key area. That's the end of the day. The key levels and support and resistance, all of that come in together of trading price action the correct way. Okay, now I'm going to go into the smart money manipulation setups. This is very, very, very important. So let's get to it.